Hi, welcome to the Market Alert for Monday, the 9th of January 2023. So Friday, slowing salaries and slumping services sparks savage stock and bond buying spree. The best start of the year for bonds in at least 60 years. We've got inside the strong jobs report. Notice that, strong jobs report, which is inflationary, but it doesn't matter. Full-time workers 1K, part-time workers 679,000. Soft wage growth sees market rejoice amid dovish Fed repricing. So again, we've got all of this BS about pivoting. But I do suspect, I think it's February the 1st is the next FOMC meeting. And we're probably only looking at a 25 basis point increase in rates. And that's bullish because they're tapering in a sense. Yeah, well, not taper it. Well, they're tapering the amount of the increase, but it's certainly not the tipping point or reducing rates. But it doesn't matter. It doesn't matter. All-time highs are back on the cards, aren't they? We've got war, we've got inflation, cost of living crisis, you name it. Everything, recession, and the markets continue to move to the upside. So it's all discounted, repriced, removed, and they can continue to bring the markets up. So Friday, we had the non-farm payrolls. It came out higher than forecast, but as I said in Friday's alert, they'll have a look at adjustments, and then once they've made those adjustments, the market will move to the upside, and that's exactly what happened. We were at 263 on the previous, and then it was downgraded to 256, and that's how they do it. So they make it look bad, and then they just recalculate it, downgrade it, revise it, whatever term you want to use, and then they move the market back to the upside, and that's precisely what happened during Friday's trading session there. So let's have a look at the market's reaction to it and kick off with the Dow. So in the Dow, we see the market moving sharply to the upside, as can be seen here, up to the 50 fib retracement there, straight through all the resistance that we had. We had resistance to the left, we went straight through it all, and we're up on the overnight as well. So we're clear to move to the upside now in the Dow as well. In the 30-minute chart, well, there's the market's reaction, and then we get a bit of a pullback in the cash, and then off we go. Market moving all the way up, 876 points if I recall in that move. On Friday, we're at the high already. We're already staying above the 5-bar moving average in the 30-minute chart and the 20. And we've got the closed there as support as well to continue to move to the upside. If we have a look at the monthly chart of the Dow, you can see that it's in a bullish phase there. We've got rising lows for the last 3 months, including January's low at the moment, and continuing that to move to the upside. 36,000, isn't it, the all-time high? Just drag that out. Yeah, 36,951. It's not a big deal when you consider that we've already come up off the low there to this high. We're already up 6,353 during the last 3 months for the Dow there. So not impossible at all to get back to the all-time high of 36,951. Like I say, with all of the backdrop of what's going on, this is insanity on steroids. But you've got to trade what you see if you want to make profits on out of these markets, and it's a buyer's market. It's just insane. I know it's counterintuitive to the fundamentals, but that doesn't matter one jot at this time. You will get the odd day where it pulls back, but at the moment we're continuing to move to the upside. In the German Dax, well, we took out the resistance at 1467 with the overnight market, as can be seen there. We traded up to this during Friday's session with that non-farm payrolls news to that resistance 14,676. This market's also put on in the last few weeks. If we just go to the low there up to today's high, just under 1,000 points for the DAX, and there doesn't seem to be any stopping this either. It's stronger than the Dow because we've already got back to the recent high to the left, and the Dow is only 50% retracement of its high to the left. So the DAX, even though Europe's a basket case, continues to move strongly to the upside. In the 30-minute chart, you'll see again on Friday we traded down to the low. The low was is very important in a bull market. I keep saying this, and then we see the market moving to the upside. The high is going to be important for this market during this morning. It's got to hold above this level. It's also got the 20 MA in the 30-minute chart to hold this, to move it back to the upside. In the monthly charts, we're just coming through 62. Again, you can see we've got the rising lows for the last 3 months, and we've also got a move of up to this morning's high of 2,870 points there in the DAX. So again, not a problem to actually move up to these levels. The all-time high 16,297. At the moment we're at just coming up to 15,000, so we're only 1,200, 1,300 points away from the all-time high. It'll be interesting what the market does when it gets back to these highs, but at the moment there's no problem for the markets because it's just discounting all of the unfavourable news and turning it into positive. Last week all of the news was inflationary. All the numbers that came out pointed towards continuing inflation, but the market just ignored it and continued higher. Yeah, in this daily chart, like I say, we're above the 14,676 30-minute chart, continue to move higher, and in the 5-minute, which you can see overnight already, the market consolidating with a big volume bar there. What time was this? This is at 1:35 a.m. and the market now finding support at the 14,700 level. On Friday, if we go back to the start of the trading session, you will see that the market moved lower. There was some weakness around there, but as I say, it didn't take long, did it, for the market to then move to the upside, pull back. You can see there we've got a pullback, but we've got momentum continuing to rise off the DP, and the rest is history, as they say, up several hundred points overnight, and including Friday's evening session there as well. So at the moment, the DAX holding at the 14,700. There's your high and your close. You've got the 50 EMA in the way here as a support area as well. In the S&P, same as the Dow, taking out the highs to the left, but only 38% retracement so far. 50% is where the Dow is, but the S&P is nowhere near it. We've got the 200 MA there and the 62% retracement for the S&P to take out in order to move higher. In the 30 minutes, again reacting to the news, which you can see there, the high hasn't been breached yet, unlike the DAX, which is already above it. In the FTSE 100, continuing to move to the upside as well, breaking out once more, taking out the high to the left, just as the DAX has done. And in the 30-minute chart, sitting above the high after moving up strongly during Friday's session there. And in the monthly chart, you can see there we've got the all-time highs for the FTSE. 7790 and 7903 is where the market's heading at the moment. Again, coming off those lows and continuing to move to the upside for the FTSE 100 there. Meanwhile, in the currencies, GBP, JPY, you can see sideways to higher. Didn't really react much on Friday in the daily chart, but of course in the intraday you can see a big swing there of 100 points down and then moving back up overnight as well. In the pound, the dollar's weak, again indicating that there isn't going to be much of a rate rise at the moment, which we'll look at in just a second. The pound up strongly on Friday in reaction to the dollar's price action. Up strongly there, which you can see again coming off that low. And if we look at the dollar index, you can see there down on Friday, the market reacting badly to the news and moving lower. And there you can see overnight also we've got this support here. So the dollar isn't pricing in a rate hike at the moment as it moves down, and that's probably because, like I say, they revised all of the numbers during Friday's session. And finally, in the metals, taking advantage of the weaker dollar, moving higher on Friday and overnight, as you can see in the silver market there. There's the spike up following the news, the dollar moving lower because it took the pressure off, apparently took the pressure off the dollar, and through the high there on the overnight as well. Gold continuing to move strongly to the upside. 30-minute chart there also showing the same there after the market broke out of its sideways move during Friday's news there. And finally, let's just have a quick look at the gold-silver ratio. And there you can see we're at 78.16, dropping down over the last couple of days as well. Silver moves back to the upside quite strongly there. And just before we finish, let's have a look, see if there's any news. There is no news today. Let's see what we've got for the rest of the week. Powell is speaking tomorrow at 2 p.m. We've got CPI for the US on Thursday. That seems a bit soon. Didn't we only just have that? Oh no, we had FOMC and non-farm payrolls, didn't we? So yeah, CPI numbers. That will be interesting. And again, look, already predicting lower numbers there in the CPI month on month and the year on year core up slightly, but again they'll just end up revising this. So again, bullish numbers already on the CPI numbers for this week. GDP month on month also for the UK this week, that's showing a minus, but the FTSE is nearly back to all-time highs. And then prelim for the US. So quite a bit of a quiet week, apart from the biggie on Thursday, which is going to be the CPI numbers, which the market will be hoping are going to come out less than forecast, so they can continue to move the market back to the all-time highs. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.